Because as you all know, in the markets, there are corrections, there are changes in their earnings, and they might also be cheap as well. So do remember this: what's cheap today may not be the ones that are cheap tomorrow, and what's expensive today may not be the ones that are expensive tomorrow. Before we continue with the video, I'd like to invite everyone to Investment Conference 2023. This is an event that we co-founded about 10 years ago with the goal to educate people about investing and different investments that are out there. We have a lot of speakers from Randall Chongson, Rex Mendoza, David Lichu, Alvin Ang. But what's interesting for this year also, since I've been pushing and I've been a very big advocate of Web3 cryptocurrencies and NFTs, we're adding crypto into the mix. If you want to venture into crypto and NFTs, check out the link down below. It's happening May 27, 2023 at Samsung Hall. We're gonna have 1,000 people, 1,000 investors joining us. So I hope to see you there. See the links below, and back to the video. Hey guys, so in this video, let's talk about the most discounted stocks in the Philippine stock market, and I hope that this becomes a reference point for you to be able to check, analyze, and decide. But don't just buy because I talk about it here. Do your own due diligence and study it. So just to provide context to everyone also on how am I determining which stocks are the most discounted, allow me to give pretext on this. And for simplicity purposes also, we're just using the price to earnings ratio. For those who don't know what the price to earnings ratio is, it's the stock price divided by the earnings per share. Meaning also, if you're looking at it price to earnings or EPS, the lower the price, which is part of the numerator, the lower the PE multiple is and the cheaper it actually is. For those who are new to investing in the stock market, the lower the PE, the cheaper it is, the higher the PE, the more expensive it is as well. However, it's not also a standalone metric. You can't compare the company's PE ratio with its past PE multiples from previous years. You can also compare it to its competitors, or you can look at it from the sector as a whole, or what some people do as well is they compare it to the broad index in general to check if it's relatively cheaper or more expensive than the index. But for this video, what I'm gonna do is I'm just gonna qualify it. I'm just gonna use 20 as our upper band, meaning I'm not gonna include stocks that are higher than 20 in terms of PE ratio by the time I'm recording this, meaning they're deemed to be more expensive. And maybe later on in the future, I'm gonna do another update because as you all know, in the markets, there are corrections, there are changes in their earnings, and they might also be cheap as well. So do remember this: what's cheap today may not be the ones that are cheap tomorrow, and what's expensive today may not be the ones that are expensive tomorrow. So the discounted stocks that I'm talking about in this video are the ones that are cheap and discounted via PE ratio at the time of this recording. So I'm going to put a lower limit of a PE of 10. We won't be analyzing or discussing stocks that are below 10 in terms of their PE ratios as well. And there may be some companies that may be heavily discounted also, but there may be some changes in the way they may be battered down severely, that there might be also something wrong with the company as well, or because they're super battered down, they might be super bearish and it may take a while before they start to recover. So our main criteria and our main band is nothing above 20 and at least somewhere around 10 as our lower portion of the band for its PE ratio as well. So all of the data that I'm showing you are all available online. You can look at your broker, you can look at PSE.com, you can look at websites like Reuters, Bloomberg, investing.com as a reference also to be able to do this. So what I'm doing is just collating this to all of you so that you can watch this and then you can start writing down notes and you can do your own research as well. We're gonna go from the more expensive ones to the cheaper ones. So from the ones closer to 20 to the ones closer to 10, something like that. First off, you have Bloom's PE ratio is 19.39. Then you have the Philippine Stock Exchange. When I say the Philippine Stock Exchange, not the index, but PSE, the company, its PE ratio is 18.63. I just want to note this also for dividend investors. By the time of this recording, its dividend yield is at 2.79%. You have AC Energy or ACEN. Its PE ratio is 18.37. It also has a dividend yield of 0.86%. So I'm just adding the dividend yield component for those that want to somehow also, I know there's a lot of dividend investors that follow me and watch this channel, so I just want to balance it out that these stocks are relatively cheaper, but some of them also give you a dividend component attached to it as well. Next, we have another Ayala company. We have LLHC, its PE ratio is at 17.7. It does not give a dividend. Now, we have a conglomerate. It's our first conglomerate in the list, and it's one of the largest and biggest conglomerates. And this is somewhat interesting when you have one of the largest stocks, largest companies in terms of market cap, and from a PE ratio perspective, it's below 20. And do remember this, people use the 20 also as a threshold or as a benchmark that anything above 20 is considered expensive and anything below 20 is considered to be relatively cheaper. SMIC, SM ticker code, SM Investments Corporation, falls in that category. Please do note that its PE ratio is at 17.67, dividend is at 0.71%. Then you have CNPF, its PE ratio is at 17.36, its dividend is at 0.7% as well. Then let's move on. You have Certec, which is into electronics. Its PE ratio is 16.94, doesn't give you a dividend. Then you have DNL. Its PE ratio is 16.87, dividend yield is 2.34%. I'll say this over and over, 2.34% beats a lot of your savings account. So even if you don't sell, you will still be performing better than your savings accounts. People need to realize that. And they say the stock market is risky, when in reality, what's risky is if your money is getting lower and lower and lower because the US keeps on printing and printing and printing, and the value of cash becomes little and little, and your purchasing power becomes nothing. Next, you have a REIT. We just talked about a REIT yesterday. If you missed my video there, we talked about the top dividend stocks, top dividend companies, and what they've given out on a quarterly basis, or at least reviewing them for the first quarter. Now, for a REIT, PE ratio is 16.84. Its dividend yield is 5.82%. Then we have Shakey's. Dividend is 16.28. I just ate in Shakey's with my daughter yesterday. Dividend yield is at 0.36%. Then you have Figaro. For those who love coffee, its PE ratio is 15.38%, while its dividend yield is 1.96%. Now we have Raslag. For those who were able to watch this, I had the chance to interview their CEO. Check it out. It was a very, very insightful interview. And its PE ratio right now is at 14.18%. They don't give out dividends. Upson, which did an IPO just a few weeks ago, has a PE ratio of 13.89%. We don't have any details yet on its dividends. RRHI, or Robinson's Retail, its PE ratio is 13.63%, and right now its dividend yield is at 3.62% as well. Next, you have ICT, International Container, 13.61 PE. Then you have a dividend yield of 4.83%. Relatively higher, but not above the 5% dividend threshold. We have two banking stocks side by side. PPI at 13.59x, dividend yield of 1.91%. Then you have Union Bank, 12.95 in terms of its PE. And these are relatively cheaper already. They're far from 20, close to 10. And you can actually compare it also that Union Bank 12.95, BPI 13.59, comparing them head to head. UBP is relatively cheaper as of this recording versus BPI. So that's how you can at least compare banks using PE ratios side by side. Next is Manila Water at 12.81, again with a very, very high dividend yield at 5.35%. Next is you have San Miguel Pure Foods, FB. PE ratio is 12.73, no dividends. Next, one of my favorite REITs, you have C-REIT. PE ratio is 12.5. By the time of this recording, its dividend yield is 7.41%. Next, you have Sun Life Financial at 12.5 PE. Then you have Converge at 12.35. I hope you're writing this down, guys, and I hope that you will do your own research after this. Then you have Aboitiz Equity Ventures, AEV, at 12.06. Then you have Nickel Asia, I think one of the few mining stocks that we have currently in this list, at 11.98%. Their dividend is at 2.41%. Then you have BDO, which is comparing it side by side to the banks that we talked about, BPI, Union Bank. It's relatively cheaper at 11.93%. Its dividends is at 2.42. Now, we have AC in the mix also, which if you compare it head-to-head with SM, two of the largest conglomerates in the Philippines, AC is relatively cheaper. PE ratio is at 11.56%. Dividend yield is at 1.06%. Next, you have Axelum, AXLM. PE ratio is 11.24. They don't give us a dividend. MPI has been cheap for a very, very long time. Its PE ratio is 11.11. Dividend yield is at 2.86. Next, we have BMW, another property company. I had a chance to interview their CEO a couple of years ago during the pandemic. We did Zoom calls and we were able to do a deep dive also on how the company is. Their PE ratio is at 10.72 and they're doing amazing work. Also in the Bay Area, their dividend yield is at 1.09%. You have Manila Water, a very, very defensive stock with a PE ratio of 10.68. And what I've noticed also is a lot of utility companies from a PE ratio perspective, historically I've noticed that they have been very, very low. I'm not sure if you've noticed this, but we have excluded a lot of historically expensive stocks from a PE ratio perspective. We're not, Ali's not here, SM Prime's not here, JFC is not here because historically they have been expensive. You have Manila Water. Next is we have another power company, a utility company, SPC. PE ratio is at 10.35. Its dividend yield is at 8.15%, which is relatively high still. It has gone down already as compared to its previous dividend yield, but this is an example of a stock that is relatively cheaper with a higher dividend yield as compared to other stocks in the market. Next, you have RFM. P ratios at 10.09. It has a dividend yield of 7.03%. Now, this is something that's a bit fascinating. The last two companies that I'm going to mention are highly connected to each other, part also of the same group. And the other one that I want to mention is, I think, a very, very good brand, and it's a staple also that even in the midst of the pandemic, people were going to them, and even as the economy is already opening and has reopened and people are out already, they never run out of customers, and right now they're relatively cheaper from a PE ratio standpoint. Talking about Pure Gold, PE is 10.08, dividend yield is 2.64 as of the time of this recording, and lastly, connected to it, Keepers Holdings, PE ratio is 10, dividend yield is 3.44%. That's a wrap. In terms of the most discounted right now, closer to 10, we have Pure Gold and Keepers, and the one closest to 20 is Bloom. If you like more videos about this where we do deeper dives on stocks in the Philippine Stock Exchange, put your questions down below. Like, share, subscribe, and smash the bell so you get updated every time I come up with new content about investing. If you want to know more about PE ratios and fundamental analysis, 3 ways for you to learn. One is check out the fundamental analysis video section I have here. It's all for free. Number 2, check out my books. They're available in Shopee. The links are down below as well. Number 3, check out my fundamental analysis webinar where we have pre-recorded videos that you can watch at your own convenience with the goal and the narrative to help you understand investing in the stock market, that it doesn't have to be daunting, it doesn't have to be intimidating, that it's something that you can do, it's something that you can flourish on, and it's something that you can actually learn as well. So that's it for now. This is marvingermo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.